Good afternoon, traders. It's about 2:20 here in the afternoon on Thursday, and I'm going to make a quick video here about support and resistance. I'm getting a lot of questions about it, and it is something that I use regularly, but I don't always put lines on the chart, so it may not be so obvious. So for example, this morning, and I have a video of that trade, you can check it out and see how it went. I traded NXTD in the pre-market, and I used extreme support and resistance levels from the aftermarket, essentially resistance, because if you're going long, that's the one that matters the most to you. So essentially, I marked out the high of day here. I may have not marked it, but I looked at it, and I knew this was the high of day. So when I pulled the chart up, I think in that trade I got in it, or I pulled the chart up when it was somewhere in this area. So I noticed that this thing broke the high of the aftermarket. That makes it strong right off the bat. It's broken its extreme resistance level. So now one thing you could do is start looking for an entry. I missed this move here. This has already happened. So then I noticed, okay, now this thing's running up, and I'm basically waiting for a pullback. And here, let me just move it off to the side so you can kind of see what I saw. And again, you can watch that video and see it play out live. So I saw this thing running up, and now I'm just waiting for a pullback. There it gives me a pullback on this one candle, and this candle is about twice the size of this one. So that's a 3-bar play. The only thing is that, you could argue that it's kind of extended here. But anyway, I took it as a 3-bar play, and I set my buy. Well, I should say that I set the level that I was going to buy at the break of these candles, which was 129. So I wanted to buy at 130 as soon as I saw 130. So actually this thing ended up being a 4-bar play because it didn't break on the third one, it broke on the fourth one. And then my stop loss was down here. So this was an extreme resistance level while that was playing out. So that's what made me want to get in at that point. Was okay, when that extreme resistance is broken, then I consider the stock strong, and I get in. And then I took essentially a 2R trade off of that based off of the distance between my entry and the stop loss here. That's 1R. So this thing moved 2R pretty easily. I did scale out a little bit, but you can watch the video and see what that was all about. So now this is no longer an extreme resistance. This is, because that's the new high of day. And then once I'm in the pre-market, or I should just say, I'm going to just give this to you how it comes to me. So I was done trading at that point. So the next time I looked at this thing, this was the high of the pre-market. So I marked that out as an extreme high. I like to use that color for my extreme high. And then, so I'm basically analyzing the pre-market chart in order to possibly take trades at the open. So I'm looking for the extreme high and the extreme low of the pre-market. I don't really care about the aftermarket. The aftermarket kind of affects the pre-market, and the pre-market affects the open, if that makes sense. And that's a good general rule of thumb. It's not, hard and fast, but that's what I notice. So I didn't actually take any trades on this at the open because I only trade for the first 15 minutes of the open, and it didn't really give any good clean patterns. But if you were watching this thing at the open, what you would do, and this is what I did, I'm sure it's on my video where I was looking to trade this thing. Sorry, this scroll in and out is taking a long time. Like Weeble's pretty laggy right now for some reason. So now you would mark out, sorry. Wow, what is going on, Weeble? This is pretty rare that it's this laggy. Okay, so I wanted to mark out that level there. That's an obvious resistance. And as far as the market open, at that point, that was an extreme resistance level. But then, this thing pulled back so hard, it looks weak. So I'm not really interested in it until it breaks that level and then pulls back more moderately. So it breaks that level, but I want to see it pull back to that level and then bounce off of it, and it doesn't do that. It comes crashing right through it. So that would scare me. That would keep me away from the stock. And then eventually it chops around and it comes back up almost to that same level. It looks like it's only 1 cent away, I think. Oh, interesting. So they're actually at the same, oh, it's 132.9 and this is 132. So essentially the same level. There's a double top here, and then you would mark that out. That now becomes your extreme resistance. And if you're, more patient than I am and you just want to sit here and watch this chart play out, what you're going to be watching for is for it to break that level. And once it does break that level, now it's showing signs of strength again. And then you're waiting for a pullback, right? Now this doesn't quite give it to you. This and this is interesting because look at how it consolidated around the extreme high of the pre-market. But yeah, so here it broke the extreme high of day, and now it's bouncing off the high of the pre-market. I can almost guarantee you that's all the people that bought near the top of the pre-market, and they just want to get out of this thing. So that's why you get all this choppiness. Now, it would have been very difficult to get an entry, the right entry after this consolidation, excuse me, unless you put your stop way down here, which seems pretty wide, but it's actually not that bad if you consider that it's a 9 cent range, right? So that's like less than 10% of the stock price. So, I mean, it's not the tightest stop for sure, but that's what you would have had to do, and I don't think I would have. I would have gotten stopped out almost guaranteed, because I would have wanted to buy for the break of this level, and then I would have had my stop here, and then I would have been stopped out, and that would have been a losing trade. So the way I trade, I don't think I would have made money off of this thing. It just wasn't clean enough. So yeah, like I said, you would have had to put your stop down here, get in for the break of this level, and then finally it pays off. The only other thing is, since this is an extreme high, you can consider that anything after this is the beginning of a new direction, and then you could call this here a 3-bar play. And then set the top of these candles. Wow, it's never this slow. I wonder what's going on. But anyway, maybe I just need to restart my computer. It's been on all day. But yeah, so then you mark out the high of these candles, and you would enter as soon as that level is broken, so 150. And then your stop could be down here, which is 145. So you just need it to go 10 cents to get 2R out of it. So it needs to go up to 160, and it goes up to 161 right here on this next candle. So that would have been an easy 2R trade. Let's say perhaps you didn't get filled there because maybe it popped up and then came right back down. I think you probably would have gotten filled, because look at it's 3 million shares of volume. But if it did one of those jobs where it just pops up and comes right back down, you're still in it over here because your stop is way down here, and it definitely will fill you on this candle if it didn't on this one. So anyway, I think that's enough about the support and resistance. There is limits to this stuff, and you have to keep in mind, like, how many times can the stock break extreme levels and keep running up? Like every time it establishes a new high, that's a new extreme level. Then it breaks it again. It doesn't really give you a nice entry here, and now it goes up a little less high, I think, relative to where your entry might have been, and then it starts to get weak. Then it's pulling back, and this becomes the new extreme high, and it breaks it one more time, but this is the end for sure, because now it comes up and then pulls right back down, and it breaks way below the high of day. I mean, your first indication that the stock was running out of gas is over here anyway, because it just starts to make lower lows. So that's an indication that you're on the backside. And this is kind of like, I don't know, FOMO trading or something. People coming in, upset that they didn't catch the first part of the run. And this is basically bag holder territory right here. So now, this thing just, it finally cannot continue to break the extreme highs, and it starts selling off. And I think that was it for this move. Let's see. Yeah, now it's trying to come back up, and then again, you're getting people FOMO trading. But notice how this is holding as a resistance level. It's been tapped a couple of times, right? It tried to break out once but failed, and now it's trying to break out again and it's failing. So that's resistance for you. So hopefully this helped clear up some things about resistance and support and how you can use them. And if you're new to it, you might want to really go through and mark out all the lines as you're trading, but after a while I don't think it's necessary. You can kind of just see them on the chart based on the candles. So let me know if you have any questions or comments below, and thank you for watching.